it seems like a lot of folks are much more at ease with sort of the state of where Tesla's at, where Twitter's at. What are you hearing from institutionals when you have conversations with them about just their gut feel on how Tesla is going to, the outlook for the rest of the year, their confidence in their investment? What are you hearing?
So I was looking at some numbers yesterday. You can get on Bloomberg and put what percent of the shareholder base is institutional. Tesla's among the lowest. It's 45% is held by institutions, 55 by retail. When you look at something like Google or Microsoft, it's 78, and even Apple, which has a little bit more of a retail mindset, at 65 is institutional. And so people ask me, I said, why aren't institutions in love with Tesla as much as you are? And there's a couple reasons for that. One is, there definitely is key man risk. People like having a bigger team, and look, having all those people on Investor Day on the stage, I think helped. I think, there is a view that Elon doesn't care as much about the stock price. And I don't think he doesn't care. I think he's much more long-term focused, and that's what you want a CEO to be. I think we call it capital allocation. So once you've got all the internal projects funded and you're spitting out cash, what do you do with the cash? That's capital allocation. And it's not about, it's once you've built all the factories and all the robots and all the robo-taxis and spent money on internal stuff, once there's cash, what do you do with it? I know that because they bought Bitcoin, and people know my feelings about Bitcoin, that was a big knock against them, and they're just letting the cash build up. They have 22 billion in cash. And my projections is they're gonna after all the plants, all the R&D, they're gonna generate about 60 billion of what I call free cash flow or excess cash flow over the next 5 years. What do you do with that cash? And I think there's still a worry that they'll do something stupid with it. Will they buy more Bitcoin? I doubt it. Elon seems to have learned his lesson. And when I read the article about Zach, it seemed like he was against it and Elon was for it. But will they put money into cash at 4%? That would not be a good thing. You need a certain cushion, but how much is enough? And if we're talking about, and I don't want to get into buybacks, but if you're trying to give money back to the shareholders, how much cash do you need to keep on the books? Maybe 20 billion. Is that enough? It's probably a year's worth of capital in case you get into trouble. And if we do have a recession, which I want to talk about that in a minute too, because there is definitely a feeling that the reason, and it's being spread by Elon, that the reason estimates have come down so much because they're in a recession.
Yeah. But before we get there, can I ask you two questions? The first one is, do you still think there are a Bitcoin in the Tesla balance sheet? Because I don't find it's what, 100 million, 125 million?
I think it's a little more than that, but it's tiny. But I think, look, they learned their lesson that Bitcoin it's not the easiest thing to predict. It doesn't just go to the moon. I just know as an institution, people say, well, I could do that myself. Give me the cash back. And as a shareholder, I put money into Bitcoin, or I put money into gold, or I put money into
it's just not the right play. I agree with that.
Like, that's not what your job is. It shouldn't be buying Bitcoin. So that was a big, as you remember, that caused me to get out of Tesla for a while. Because
I remember.
It's just, you don't do that as an institution. You don't see, there's only 3 companies I know of, and they all have these capital allocation issues. One, of course, was Square, and one is MicroStrategy, which is Michael Saylor. And you just don't see CEOs saying, "Oh, I'm going to put a bunch of money into Bitcoin." It's such an anti-shareholder thing to do that you'd never do it. So do I think they're going to continue to put money into Bitcoin? I said no. I think they learned their lesson. My bigger worry would be, and it may be a good thing, will they take their cash and start buying stuff? And so we've talked about some of the things they could buy. They could buy, some restaurant chain and, stick it in all their supercharging stations, rather than, what I would rather than do is, get McDonald's or get Starbucks, to pay some fee so that they can get access, to those charging stations. That would be a bad use of capital. If they bought, if they vertically integrated and bought, a lithium miner or some battery company, that would be a good acquisition as long as they didn't. And people would respond favorably to that. But people don't want to see them go into some, business off to the side like a restaurant business. That would not be a good use of their cash.
No, I see that. Can I do my second question first?
Sure, yeah,
I'll get there.
Yeah.
When you saw, and Cindy, I would like you to pull that graph up. When you saw the votes, the shareholder votes for the board members this year. And that's going back to your point that you said Elon has so much. Exactly. If you can just go on the chart, Cindy, and make that big. Exactly. Only 5% of the people voting for the shareholder proxy were against Elon. I mean, this is incredible. That I've hardly seen such a result. And I think it's really worth we point this out because nobody's talking about it. The press is certainly not talking about it. GB Strobel had 14% against him, and Robin, who really had to take a lot of heat these last 12 months, right? Because everybody was screaming against the board. What's the board doing? Missing in action and whatever. Only 25% against him, which is considerably less than what happened last year against Ira and Kathleen. So I just want to point out what a strong board we have with so much so much support from the shareholders.
Look, the 5% against Elon is a extremely low number from what I've seen. You know, there's always people who want to throw out management. I didn't think the Robin number was that surprising. I actually thought the 25 or so was actually, you know, higher than what I thought it would have been. And remember, the stock has had an amazing run this year. It was terrible last year, but you know, and a lot of times people vote with their memory. And you know, if the stock is doing well, they're happy with the board. If the stock isn't doing well, they're not. But what I was happy to see is that people overwhelmingly support Elon Musk. And I talked to lots of institutions. I don't know any, like I said, serious institution who thinks Elon should go away. They are all so happy that he's not leaving, that he hired somebody to run Twitter, and now he's going to focus on this because that's what he loves. It's his passion, and he's good at it. You know, sometimes things take a while to get done, like Cybertruck and FSD, but you know, he's tackling big projects. You know? They're hard to get FSD to work.
Yeah,
it's supposed to. So I'm very happy that he's still CEO. Yet he isn't going anywhere. Because I was thinking about that. I said if he were to announce, not that he would do that in an annual meeting, you wouldn't do it in that forum. But if he were to announce that he's stepping aside as CEO and he's going to stay as, you know, the head of product, and he's bringing in, I don't know, name somebody. Herb Deese to run the company, that would be bad. And a lot of institutional investors would follow me out the door. But he's still a CEO. He still seems actively engaged. That's a great thing for Tesla shareholders.
And it sounds like he's going to be there for quite a while because if I remember correctly from the investor day, he signaled that until they're very far along their AI sort of investments with the bot and all that good stuff, which is going to have a long lead time, I'm guessing, at least 5 to 10 years, right? It's going to be a significant time.
He's got like 4 or 5 really big projects that, you know, he's working on, and, you know, Cybertruck and getting the cost down 50% so he could expand the TAM to the masses. And look, that is such a great strategy. And I just want to make that distinction versus discounting. You have to have a bigger and bigger TAM. You read Master Plan 1, it's all about Roadster to Model S to Model 3 and now Model 2. That is what they should be doing. If you were to come up with a blank sheet of paper today, that's the way you expand TAM, and that's the way you accelerate EV adoption, and that's the way you accelerate the world's transition to sustainable energy. That's all what you need to do. I think that's a very different plan, though, than, you know, when people start arguing with me about discounting, and I say, you know, you don't want to keep discounting because you're training people to wait. And we could talk about that because, you know, there was something last night where, you know, they doubled the amount of inventory discount on Model 3.
Model 3, yeah.
But that's different. And Elon has said it, and he said it, you know, when he tried to answer my question at the end of it, he also said on the conference call, he said, look, what I'm trying to do is balance essentially supply and demand. And when you look at the numbers, and you know, the bulls seem to forget this, they've been increasing production at the rate of about 45% year over year, while underlying demand, in effect deliveries, is increasing at 35% year over year. So that's going to cause that the difference between production and deliveries is going to cause a change in inventory. And so what they're doing is they're trying to keep the inventories. One of the things they're trying to do is keep the inventories from getting too high. And what was interesting about last night, and I wasn't negative on this, I was actually positive, it looks like they're trying to make room for a refreshed Model 3 at some point, but they can't announce that yet because then nobody would buy a Model 3.
The old one, exactly.
Right? So the inventory discount on Model Y was only $500, and the discount on Model 3 Performance was only $500. So I'm okay with that, but just don't confuse the mission of affordability, which is bringing out a new product, that's a much lower cost. And that's the next gen vehicles that he talked about at the investor day. That drives affordability. That's consistent with the mission. Whereas when they're discounting the inventory, they're just trying to clear, the excess supply that's in the system today for whatever reason. And Model 3 has got its own issues because you got a refresh coming, I believe. So that's just an important distinction, because I get into a lot of debates with people about that. I'm a big fan of affordability. I'm a big fan, as you know, you guys have talked to me about this, of bringing out a $25,000 vehicle. I've been talking about it for 2 years. And the fact that they're doing it is actually a great thing, because that's consistent with the mission, and it'll dramatically expand the TAM. If they want to get to anywhere close to 10 million units by 2030, you got to have a $25,000 to $30,000 car, because that's where the message. And who's going to lose? Toyota's going to lose as a result of that, because they're the big player there. So I'm a big fan of that. I'm not a big fan of discounting Model Y, because they don't need to. There's no inventory of Model Y. I'm very perplexed of why. They're just. And it's interesting, because they took the Model Y price up by $250 and then $250, and now they're discounting it on the inventory. You've got to understand, from a financial modeling standpoint, when you discount existing inventory, it's a one-time, one and done discount. Once the inventory's gone, you're back to the old price. Where when you cut price, if you're modeling this, it's in perpetuity. You have to cut the price forever until you take prices up again. So, and I try to explain this to some of the bears that I talk to. I said, you don't get this. You're not making a distinction between an inventory discount and a price cut, but it's a huge difference, because one is just one and done, and then you're back to the old price.